Biggest earnings of this earnings season are about to happen tomorrow. Wednesday after the bell, we get four big tech companies reporting at the same time. This hasn't happened in a few years, so it's going to be instrumental and it could determine how the market moves in the foreseeable future. In this video, we're going to cover a couple areas so that way we go into earnings confident and know what we should be looking for. We're going to look at what did these companies have for 2026 Capex guidance? What are analysts expecting for revenue and EPS growth? What are the past numbers that they've had over the past quarters and their year-over-year comp? And then what are the current market conditions going into these earnings? So why is this going to be such a big deal? Well, Meta, Google, Amazon, and Microsoft are four massive companies. They make up nearly 20% of the S&P 500. So what happens after the bell Wednesday could dictate how the market goes overall, whether we see a big pullback or if we see us continue to push forward. Some of the key things that the market's really going to be paying attention to is the AI spending. So these four companies came in with huge guidance numbers for their Capex spending, way bigger than they did in 2025. So the market's going to want to see, are they maintaining these numbers? Are they reducing these numbers? Or are they increasing these numbers further? And also, they want to see with all this increased spending, what is their revenue looking like? Are they starting to reaccelerate growth? What are they guiding to for the rest of the year? Are we going to see an increase in guide? Looking at the S&P breakdown, you can see these four companies make up a very large portion, and they will have a large impact on the overall S&P 500, which in return will have a large impact on the market in general. So let's dive into looking at what was their CapEx guide for 2026. So these four big tech companies had huge guides for 2026, all of them being over $100 billion, with Amazon having the highest guide of nearly $200 billion. So going into these earnings, let's see if these numbers stay the same. Let's see if some of these ranges tighten as they get more certain in what their spend will be. And let's see, do we think any of these end up increasing or lowering their guide? Now let's go ahead and look at what are analysts expecting. So this is important because what analysts expect will largely be how they trade post earnings on if they beat or miss these numbers. So going into Microsoft, analysts are expecting a little over $4 for EPS, up about 17% year on year. For revenue, they're looking for a 16% increase, and the major areas that they'll be looking at is at their cloud growth. So that's Azure for Microsoft. They'll be looking for around 38% growth, and they'll also be looking to see if margins are improving or not in the cloud business. Going over to Alphabet, which is Google, EPS expected is $2.83, and revenue is expected to be growing 11% year on year. And the two areas that they'll largely be paying attention to is search. Is search revenue continue to grow? They're expecting 16% year over year growth. And for cloud, right now Google's cloud is exponentially growing, and they're projecting for somewhere around 50% growth for this. For Meta, we're expecting $7.51 for EPS, and then for revenue, they're expecting to see 31% year on year growth. And for Meta, the big things that they'll be looking at is around their ad business. So for ad revenue, they'll be looking for a 30% growth, and they'll be looking to see how's the ad impressions growth and what's the average price that they're getting per ad. So for both of these, they're looking for pretty large increases in this. And then lastly, at the beginning of April, Meta announced their new AI model, Muse Spark. So we'll be looking to hear some commentary around how that's going on the earnings call. And lastly, Amazon. Analysts are expecting EPS growth around $2.11, and they're looking for revenue growth in the 14% range. And for Amazon, they'll be largely paying attention to the AWS growth, looking to see if this is starting to reaccelerate. And then advertising services. So for Amazon, advertising has slowly been creeping up to be a large component of their business. They're looking at estimates for advertising alone to be $16.9 billion, looking for a 20% growth in this area. And across all four, The bull case scenario for it is really going to be seeing reacceleration in the revenues. For the companies with a cloud business, can we see a reacceleration in their cloud growth? And then for the ones with advertising, can we see them continue to reaccelerate their advertising profitability? And then on the bear case, a bear case would be if we start seeing that they're increasing Capex spending or they maintaining these high Capex spends, but their revenue growth in their various businesses are not continuing to reaccelerate, but they're actually flatlining or maybe even going down. If we see that, we're going to see a major pullback in these stocks and the overall market. So let's go ahead and look at past numbers. What are the numbers that these companies have been doing in the past that we'll be kind of benchmarking against? So if we're looking at total revenues, you can see all the way on the right side here, they are projecting a reacceleration compared to Q1 of 2025. So let's see if these numbers do hit and revenue does increase. When it comes to net income, they are projecting across the board a decrease in net income. So analysts are expecting that the increase in Capex spend is going to at least temporarily have a hit on profitability. So let's see if this actually happens, or can they surprise us and actually improve profitability even though spending is increasing? And lastly, let's look at what's the current market conditions. So why this is important is depending on how the market is going into earnings can influence what the expectations are. So sometimes going into earnings, expectations are sky high already, and someone might have amazing earnings, but the stock might get sent down just because expectations were so high that the bar to meet had to exceed by such a high margin that even just a slight beat will not will not be rewarded. So current market conditions are the fear and greed index. We are in the greed territory. So not too long ago we were in extreme fear, but over this past month we've really started to shift into more of a bullish sentiment. And if we're looking at investor sentiment for the next 6 months, you can see there's been a huge flip to extreme bullishness. So going into earnings, the expectations are very high. So we will need to see great numbers in order to get an instant reaction in the positive way. And for these four stocks, since the start of April, you can see they have ran up pretty high. So don't be surprised if we get only small beats that these flatline initially, or maybe even a slight pullback depending on what guidance ends up being. And here's just a quick snippet of kind of some key information to take into earnings tomorrow. Is so reference the 2026 capex guidance. These numbers were already very large. Do we see any of these companies saying they're actually going to end up spending more? Do we see any of them pulling back in their spending, or do they reaffirm these guides? And then what are analyst expectations for revenue and EPS? Take note of these because this will be how analysts react to when the numbers come out to determine if they're beating or missing these and if they should be buying or selling off the stock. So that was the main information you should know going into big tech earnings. This is going to be a huge day. These four stocks make up about 20% of the S&P. So what happens from these earnings will largely impact how the overall market reacts temporarily. And going through these numbers and knowing what to expect and following up and listening to these earnings calls, listening to what management says, read these earnings reports, see what numbers they're reporting and what they're guiding to. This is important if you're going to invest in individual stocks because you need to know what you own and know why you own it, as the famous Peter Lynch would say. So let's go into tomorrow's earnings confident and excited, and let's listen in and see what management has to say and what they guide to for the rest of 2026. Appreciate you watching the video. Please hit the like button down below, hit the subscribe button, comment down below which of these four stocks do you think is going to have the best earnings tomorrow, and how do you think the market is going to react after tomorrow's reports. Thanks. Thanks for watching. I'll see you in the next one. Peace.